Billionaire to ZEROnaire, FTX's fall, and the crash of crypto assets. The cryptocurrency industry has had a particularly difficult week. In fact, difficult is an understatement. People have lost their hard-earned money on investments all over the place. FTX, the world's second-largest cryptocurrency exchange, is in trouble, causing another drop in the market for digital assets. We'll talk about what happened to FTX, why it happened, and what it means for the market as a whole in this video. Please keep in mind that this video is strictly for educational purposes and should not be construed as financial advice. When investing, do so at your leisure and with any amount you can afford to lose. What exactly is FTX? FTX, which has its official headquarters in the Bahamas, is managed from the United States, with the company's two largest offices in Chicago and Miami. FTX was founded in 2018 by Sam Bankman-Fried, an MIT alumnus and former trader for international exchange-traded funds at Jane Street Capital. The firm offers a wide range of trading products, including derivatives, options, volatility products, and leveraged tokens. Furthermore, it provides spot markets for over 300 cryptocurrency trading pairs, including BTC/USDT, ETH/USDT, XRP/USDT, and FTT/USDT. Its own native coin. It acts as a marketplace for buying and selling cryptocurrencies. All cryptocurrencies are built on the same foundation as Bitcoin, their flagship asset, a publicly accessible blockchain that tracks ownership without being controlled by a single central authority. FTX is significant and important because it, along with its competitor Binance, processes the majority of cryptocurrency transactions worldwide. Crypto investors of all levels of experience, from novices to seasoned experts, or in cryptocurrency industry parlance, from newbies to whales, are drawn to FTX's diverse product offering and user-friendly desktop and mobile trading platforms. The FTX platform supports a wide range of order types, from simple market orders to more difficult trailing stop orders. FTX accepts wire transfers in 9 fiat currencies, including the US dollar, euro, British pound, Australian dollar, Canadian dollar, Swiss franc, Brazilian real, Ghanaian cedi, and Argentine peso. The Hong Kong dollar, Singapore dollar, and South African rand will soon be operational, as will the Turkish lira and Japanese yen, both of which are used in limited capacity. Both FTX and Binance are international exchanges, the cryptocurrency equivalent of an offshore casino. Each also operates a separate U.S.-regulated business that strictly adheres to the scant U.S. government regulation that exists. But the vast majority of the money that passes through their books is unrestricted by regulatory constraints. The misfortune. Sam Bankman-sized Fried's crypto venture has seen a dramatic drop in value over the last week. Withdrawals have been halted at Bankman FTX Fried's cryptocurrency exchange, and a hesitant rescue from rival Binance appears to have failed. This could jeopardize depositor funds, which would be devastating for both Bankman-Fried and the cryptocurrency industry as a whole. Because cryptocurrency is subject to dramatic boom-bust cycles, these failures are common. However, FTX and Bankman-Fried stand out because of their prominence prior to their suicides. FTX has built a solid reputation over the last 3 years, despite not complying with U.S. regulations. Because of his views on cryptocurrency regulation and his financial support for United States election candidates, not necessarily in that order, Bankman-Fried has elevated himself to a position of global influence. The crisis began on the 2nd of November when an article from CoinDesk, a cryptocurrency industry news source, was published. It claimed that billions of dollars in FTX's own cryptocurrency, FTT, were stored on the balance sheet of Alameda, a crypto hedge fund controlled by FTX's creator, Sam Bankman-Fried, and were used as collateral for additional loans. If this is the case, a decline in FTT's value could harm both companies due to their joint ownership. Because FTT itself had no value beyond FTX's long-standing commitment to buy any tokens at $22, the institution as a whole was feared to be a castle built on sand. This discovery, based on leaked internal records, was shocking given FTX's close relationship with Alameda. Both were founded by fraternal relationships. The fact that FTX essentially created the FTT token out of thin air raises concerns about the open market value of the FTT tokens held in reserve by connected firms. A negative rumor about a financial institution may become true, causing people to withdraw their money out of fear and causing the anticipated liquidity issues. Since the initial publication of Allison's account, CoinDesk reporters have been urged to conduct extensive research and exercise extreme caution when reporting on FTT and other events at Alameda and FTX. Changpeng CZ Zhao's position as the founder and CEO of Binance, the largest centralized crypto exchange in terms of traffic, is without a doubt the most intriguing aspect of the current scandal. CZ and Bankman-Fried had occasionally collaborated over the previous 5 years, but recent interactions have revealed increased interpersonal and professional conflict. The simmering issue reached a head on Sunday when Binance CEO Changpeng Zhao announced that his company was selling $500 million in FTT holdings due to new discoveries that have come to light. The situation deteriorated from there. As the value of FTX fell, customers began withdrawing money in a bank-run-like exodus. According to Reuters, Bankman-Fried stated that the company experienced a giant withdrawal surge this week as users rushed to withdraw $6 billion, £5.1 billion, in crypto tokens from FTX over 3 days. Daily withdrawals, according to Bankman-Fried, averaged in the tens of millions of dollars. Zhao then stepped in to save FTX, announcing on Wednesday that he was withdrawing from the deal after agreeing to buy the company on Tuesday. Binance claimed, citing revelations made during the due diligence process and the start of regulatory inquiries in the United States, that the concerns are beyond our control or ability to help. Potential FTX rescue mission. To halt the exodus, the company must either find billions of dollars to satisfy client withdrawal requests or devise a way to reassure customers that their money is safe. That is never easy when there are so many customers rushing for the door. Bankman-Fried told Bloomberg that the company had an $8 billion cash deficit and needed $4 billion to stay solvent. From our sources, the deficit could be way more. Deeper questions are also welcome to be discussed. The day before the company decided to sell to Binance, Bankman-Fried tweeted that FTX was good and that it did not trade with customer assets at all. Sequoia Capital, a venture capital firm that invested $150 million in FTX, warned investors in a letter that the company was experiencing solvency issues, meaning it owed more money than it had. He reappeared the next day after the deal fell through, apologizing for his errors. He began a series of tweets with, "I fucked up twice," apologizing for poor communication and stating that he had mistakenly assumed the exchange could not experience a liquidity shortage while maintaining that it was not truly bankrupt. Despite Bankman's apologies, users were still perplexed, especially given other statements he was making at the same time. According to the Wall Street Journal, FTX loaned Alameda $10 billion in customer funds for gambling purposes, representing a sizable portion of the exchange's $16 billion in assets. Looking at those numbers, that definitely was not a wise choice to make. The Forex and crypto world. After the FTX crisis began, Bitcoin fell from $20,000 per coin to $16,500, its lowest price since 2020. This price seems to only be the start of an impending downturn. According to CoinMarketCap, the entire sector has dropped by more than 5% in the last 24 hours, forcing major firms and protocols with FTX exposure to demonstrate their own liquidity. The value of FTX determines the value of a popular Solana protocol token, which allows users to trade Bitcoin on that blockchain. If the exchange fails, it is unknown whether any Bitcoin on that protocol will be recoverable, resulting in the loss of millions of dollars overnight. As with every crypto crash, all eyes are on Tether, the $70 billion stablecoin that underpins a large portion of the industry's economy. On Thursday morning, November 10th, the token was trading at 98 cents per dollar, having deviated from its peg. Tether's Chief Technical Officer, CTO, Paolo Ardoino, tweeted to reassure investors, stating that the company had handled approximately $700 million in withdrawals the day before. "No problems, we'll keep going," he said. With the beginning of a new crypto winter, the financial system's resistance to fluctuations in the cryptocurrency market has already been tested over the last year. The total value of the cryptocurrency market peaked at $3 trillion in November, but the decline this year has been caused by both crypto-specific events and broader macroeconomic issues. It is currently valued at around $800 billion. The Russian invasion of Ukraine and rising interest rates are two far more serious issues that have impacted the world's financial markets over that period. According to Carol Alexander, a finance professor at the University of Sussex, the recent tremor will prolong the chill. This is due to the industry's continued loss of confidence. As a result, this crypto winter will be much more prolonged. According to her, it is still unlikely that the cryptocurrency business will spread to traditional financial markets because institutional investors, who are always looking for big returns on their investments, are currently finding it easier to make money from traditional assets in a high-interest rate environment. Bonds and other traditional assets are becoming more appealing. As a result, the systemic threat posed by crypto is mitigated. With all of these occurrences in the crypto world, we may be correct in claiming that the winter season has only just begun, and that we should buckle up and enjoy the ride. We're hoping that when the bull market returns, we'll be able to recoup all of our losses. Don't forget to subscribe to this channel and enable notifications if you want to see more videos like this. See you again soon. Until then, stay firm in this bearish market. Prepare your mindset for a long-term journey. And remember to take care and stay safe.